Okay, 3, 2, 1, go. Hey everybody, today I'm with Andrea, my partner, and John Noldan from Rate Mortgage. So Andrea and I are gonna start doing a weekly little segment called For What It's Worth. We have a YouTube channel we just started. So again, Andrea and I both work, obviously, as you guys all know, at Coldwell Banker, and we're gonna try to have some different professionals on from the industry. Today, again, we have John, a friend of ours and a lender that we work with. So I want to introduce John. Again, thanks for being with us.
Thanks for having me on, you guys.
So John is a mortgage lender with Rate. So we kind of wanted to get an idea of what role you play, because obviously this is your baby here, right?
Yeah.
For the most part.
Yeah.
So
yeah.
Can you tell us a little bit about that?
Yeah. So I've been in the business for 24 years. I've been at Rate. It's hard for me to say Rate because it's guaranteed rate.
I just want to think. You know what? Yes.
And I'm surprised you did. That's pretty good. Yeah. So worked at Guarantee Rate when it was guaranteed. I started there in May of 2010, which was I started off in the business at GMAC Mortgage, and that was right around 2000. Became a certified underwriter with them before I got into lending, because I wanted to see how that. Make sure that I could understand how the whole process worked. They made you do that pretty much. They're no longer around. They went down when everything went down in the mortgage crisis, like a lot of other banks did. But after that I went over to First Suburban Mortgage. First Suburban Mortgage was a broker shop. After there I went to Bank Mortgage Corporation, and then Bank Mortgage Corporation got bought out by Guarantee Rate in 2010.
Okay.
Since I've been there, I was started off as a regular loan officer. Now I'm executive of sales for the whole company. There's me and four, I think 5 other guys that have that role right now, which is nice because it gives us the opportunity to have, like, we're in my own office right now.
Yeah.
I've got my own underwriting, my own processing, my own closing. Everything's done right here in their roof. A lot of banks will tell you that they have that, and they may, but they may be sharing it with a bunch of other people. There's not many people that have their own true underwriting and own processing.
Yeah.
So we can close loans in 7 days if we need to. But yeah, no, I've been doing this for 24 years, and I absolutely love it.
Cool. Yeah.
So obviously super beneficial to have all those moving parts here centrally located, right? Like if you just communicate with them, there's a problem.
Yep.
That's a big deal.
And I get a loan. It's a perfect thing to bring up, because when a complicated loan comes in, and in town here or just anywhere, because I'm licensed. We're licensed in all 50 states. The company, I'm in 37. But when a loan comes from another bank that may have fallen through the cracks because they didn't do their due diligence to figure out that there was a doable loan, I've got my underwriter right here that I can just walk over to file with. We could talk about it together. I'll give her my input. She gives me hers. And if it's going to work, it's going to work. If it's not going to work, I'm going to tell the people right away.
Yeah.
So, but that you're right. To have access to bodies in the office to be able to work with them quickly. I mean, like I said, 7 days is the fastest legally you can close. I can close it faster than that if I need.
So you actually have the ability to, like, save a deal that maybe has.
That's how I built my. That's how I built my
else,
business.
Right?
Yeah, that's how I built my business. I was, I didn't plan on getting in this profession, so I just hit the streets when I was younger, and I just got a bunch of save the deals, and that's how I kind of built my reputation with all the attorneys and realtors in town.
Yeah. I think the big thing, I always frown or get worried about the whole underwriting thing for me when I'm working with buyers, because it is that I think it's super cool that it's here for you to where you need something, you literally can ask, just yell across the the hall.
They can't ignore my emails.
Right.
For sure.
We always hear things like, we're getting closer to closing, and it's like, okay, well, we have to send it back to the underwriter.
Right.
And no one knows where that
like
goes. It
the
goes to like the magic land where no one knows what's happening.
Right.
And then we wait 4 days, and then I hear back from the lender who says, can you ask, what we need to know, they deposited $300 a year ago, can you figure out what was that for? And then it goes back to the underwriter again, and then it's like 3 days later you get it back. So I think to have that process all in house is
and it shouldn't, cool. And that should really, truly, especially in this day and age with all the technology we have, that should never really happen. I mean, that file should be scrubbed completely, which we do. So I have my underwriter, even just during the pre-approval process, my underwriter reviews the full file for the pre-approval, just so we know that once that contract comes in, all it needs is the appraisal.
But the key part of that, though, is getting all that stuff from the
up
client,
front,
right?
and you have to. You don't want to beat around the bush. You got a complicated file. Sometimes you got to ask for complicated things, and if you're not doing your job, you're doing the wrong thing by not asking them.
Yeah, so would you say, like, for like a, you know, potential buyer, like really it's super important and key to be ready to give you
Oh, yeah.
everything that you need, like, sooner than later? What's
Yeah.
the difference? You know you want to buy a house.
Right.
Maybe the right house doesn't show up for a month, 2 months, but that doesn't mean
Or
you
sometimes
wait
a couple
that
of years.
long.
Yeah, I've had people in my
Yeah,
system for years.
especially, yeah.
Yeah.
Yeah, especially in this market with so little inventory
Right,
still.
right. So yeah, the pre-approval process is a good thing to bring up. So like when people call me, come in, you know, I let them know. The first thing that we let them know, because especially first-time home buyers, because they really don't know what's going on. You know? And even buyers that are more seasoned, you know,
Yeah.
sometimes they haven't done it for a while. So you got to be very clear on what you're going to ask from them up front, which we
Yeah.
do. And the biggest point that I always make up is, you know, there's a huge difference what you're pre-approved for and what you're comfortable spending. We want to make sure that we're backing them into
Yeah.
the right number. So
Yeah.
you don't want to be
Yeah.
a house poor. You want to be able to save money. You know.
Right, because people probably can always get pre-approved for probably more than they're
Oh, they
comfortable
most of the
spending.
time they always
you know, most
do.
like, hey, you know, you're pre-approved.
Yeah.
You can spend $4,000 a month, but
Right.
really, I don't want to be able to not go out to eat.
Exactly. You don't
So
want to
I-
be living on ramen noodles. You want
I
to be able
think
to
what
save
it
money.
comes down to for most people is seeing what the actual payment looks like,
For sure.
right, for a house.
For sure.
Versus that huge.
Right, like you can
amount
buy a
that you
house
get the
up
loan
to $1
for.
million, but I have no idea that my payment is so much that I can't afford
Right.
other things in life. So,
Right,
and I
but
They
think,
heat the house.
yeah.
Right. Yeah. No kidding.
So you were talking about the pre-approval process. That was kind of leading
Yeah.
into my next
Yeah.
question,
Yeah.
I guess, is like, so I don't want to say typical, I know there's nothing typical about this business,
Yeah.
just like a mortgage, but your typical, let's say, conventional, basic loan that most people are gonna wind up getting.
Yeah.
What does that look like as far as the moving parts to that? Like I said, you sort of start with, okay, I wanna buy a house, I need to get a pre-approval.
Yep.
What, in a nutshell, I guess, what are those,
Yeah,
the moving parts
perfect.
of that down the line?
Yeah.
Of how that loan actually goes from here to closing?
Yep.
or
So
approval?
that's a great question. So the way that it works here is most of the time it's a phone call now. You know, people used to always meet face to face, but just with technology, it's gotten a lot easier, and we can streamline things a lot faster to make people's lives easier. So, so the personal call, I'll let them know that what I'm going to be doing, asking questions that they're very familiar with. They'll know right off the top of their head. I always ask them if they're gonna have someone else on the loan with them. First-time home buyers, I'm very detailed about it. Let them know, you know, the questions that we'll be asking is going to be your full name, social security number, birthday, income, assets, and then I'm going to ask for your last. I'm going to ask if you're W-2 or self-employed, because there's a big difference between a W-2
Yeah.
borrower and a self-employed borrower. You know,
Yeah,
self-employed.
I know
borrower-
that.
Yeah, no, trust me. Yeah. No, when my realtors call for loans, I'm like, oh boy.
Right,
You're going off everything. Yeah. So,
You have
but
no
kid,
income.
totally kidding. But yeah, no, but it's there's a big difference because what we have to ask for. A W-2 employee typically all we need is your last 30 days pay stubs and a W-2. Because it's going to let us, Fannie and Freddie, when we run it through the automated engine, after I ask them all those questions, we run it through an automated system, both through Fannie Mae and Freddie Mac. Some banks, if you go directly to a bank, will just use one of those entities. I use both because we have over 100 investors that we work with, so I can plug and play what it's going to be the best program and fit for our borrowers.
Okay.
Okay. But so after I run it through the automated system, I let them know when I have my assistant or myself send them an email for what type of documentation they need. If they're a W-2 employee, 9 times out of 10, that pre-approval is going to be attached to it right away because you're not lying about your income. Now, if you're 100% commission, I'm going to take a look at your pay stubs. But it just kind of depends on the line of questions we ask, what I need to ask for, and how long that pre-approval
Yeah.
could take. You know, but
Okay.
typically I can get them done in a half hour, 45 minutes.
Well, I have a quick question,
Yeah.
just while we're touching on this. What would you say is the biggest distinction between a pre-qual
That's a great question. Yeah.
pre-approval?
Yep.
Because I think people think that,
It's one and the same a lot of
Yeah.
times.
Yeah. For a pre-qual is me and you sitting here right now and me taking up my calculator, you tell me how much you make, and then me asking how many debts you have, and then not running anything. There's no
Yeah,
credit pull.
that-
There's no credit pull. There's no automated underwriting. There's nothing that's been done. There's no data collection at all. It's just me and you talking about it. You know, a lot of those, you know, back in the day were done over bar napkins. You know, so it wasn't, those don't hold any weight.
yeah, I was
They
gonna
really
say, it
don't.
doesn't sound too solid
No,
to me.
no.
I would be,
And the
not
biggest
comfortable
the
with
biggest thing that people have about getting pre-approved is, like you said, they're not planning on buying for a while, but it doesn't hurt your score because we do so much business with
Yeah,
Fannie
right,
and Freddie,
yeah.
we do a soft inquiry, and we're allowed to send out a pre-approval with the soft inquiry. The soft inquiry doesn't even show up on your credit report.
Okay, yeah, I think
And there's
that-
no ding on that at all.
yeah, I think
There's a
that
lot of
is
pushback.
a huge concern.
It is. It's
And
soft,
it's
but we
what-
do soft credit pulls.
Yeah, and is what
Yeah.
holds a lot of people
Yeah,
back from
yep.
trying to get.
Right. Or, and I don't want to say like offend any of my buyers out there, but
Yeah.
a lot of times they'll use that as a
Yeah.
not wanting to take that step. You know what? I don't want to do
Yeah.
that yet because I don't want my credit to get dinged.
Right,
And then you
right.
give them you give them the, no, it's a
It's
soft
soft
pull. It
pull.
doesn't affect them. They're like, oh, like,
Yeah.
And then they're like, now what do I got? I got to think of something else.
Right. No, totally. Totally. Yeah. Well, the next one that you'll hear is people say, I want to wait till my balances are down, you know, before
Yeah.
I pull the credit. The thing with that is, after we pull the credit, we could do a rapid rescore on, if the credit card's maxed out and they thought it was paid down to zero, we could do a rapid rescore and get that score changed within a week. So
Yeah.
it doesn't matter anyway.
And how long is a
Pre-approval,
pre-approval?
90 days.
90 days.
90
So
days.
if someone's looking, they don't find something
Yep.
in 90 days. Now it's, and then they 6 months into it later, whatever, they're like, let's go out looking again.
Yeah.
Do they start all over again?
It's great. So what's nice about, and this happened a few years ago, you know, this back to the credit thing. I think you guys remember Lending Tree. Lending Tree
Yeah.
back in the day, you'd be you'd send them your information. I'm not saying anything bad about it, but you send them your
Right, right,
information.
right.
Maybe I did a pre-approval for someone first, and they had I'm just making this up completely, a 780 credit score, and then Lending Tree got their application, and they dealt with it like car dealerships, where they sent it off to a bunch of different banks, and they were all pointed. They don't do it anymore, but they're all pointed credit. Now, credit bureaus and banks are in the same line that you could have your credit pulled multiple times within a 45-day period without your score even being dinged at all.
Okay.
So as long as it's with the same entity, which is more. But now with us, we do the soft inquiry, so nothing even matters anymore. But after 90 days, after that credit expires, because that's why the pre-approval expires, because the credit expires after 90. The hard inquiry, if we had one, falls off. We just did a soft inquiry, we just run it through again and you're pre-approved. I've had people in my system for 3 years.
Oh, wow.
So,
Well,
yeah,
that are-
yeah. So
yeah.
that's,
Okay.
and it's literally a click of a button. And that's why there should be no hesitation, because you guys know this better than I do. If you find a house, and
Gotta be
that
ready.
you gotta be ready, and you gotta send in that pre-approval right away. If you don't have that on hand, you're gonna have another offer on that, you're gonna lose it.
I always
Yeah.
say it's like going shopping
Without your
grocery store
wallet.
without your wallet, right?
Right.
If you do
Totally.
that, it's a waste of everybody's time.
it totally
and
is.
you might really miss out
That's a
on
great way
your
to put it.
dream home. I mean, like
Yeah.
that, it would be so sad.
Yeah,
right?
especially when we have lower inventory like we do right now. I mean, that's something that you really have to have your ducks in a row.
Yeah.
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 We
for
talked
sure.
about
All right,
that.
so-
So wait, so just real quick, what would you say is one more like really big like concern that most people they find it to be an obstacle that you are like, yeah, that's not even true. So like the credit
They
score
make a bigger
things-
deal about it out of it.
Yeah, they're
than
making a
maybe
big deal
probably
out
is.
of it, and it's keeping them from actually like taking
not
steps.
not having enough money, you know, not having enough money saved up, and I'm like, that's fine. We're just getting this set up
Oh,
right
for
now.
down payments,
For
you mean.
down payment, yeah, for a down payment. So that's the other big hesitation. They want to wait for that. I'm like, well, don't wait. It's not like you're buying tomorrow.
Right.
Let's talk through the process, understand the best way to have this set up for you, the pre-approval, find a good program for you, and we have a goal to work towards.
Well, then also you've got lots of different programs, right, for
Tons.
different percentages of down
Oh, yeah,
payments that might
yeah.
work for people.
Yeah, you can go as low as 3% down.
Yeah.
You know, one of the programs that we have, which is probably our most popular one right now, is called Borrower Smart. It's not credit score driven. You got to have above a 620 credit score. But like the credit breaks, I'm getting in the weeds here a little bit, but Fannie Mae and Freddie Mac set up what they call loan level pricing adjustments. Okay,
Okay.
that's how the interest rate's going to be affected. Okay, 780 is a top tier, and this is for conventional financing. 780 is going to be a top tier, and then it's in increments of 20 going down. So 780, 760, 740, 720, and so on. If you have a 780 credit score and you're not going with this Borrower Smart program, and you're putting down 3%, and you have a 637, I just ran one today, 637 credit score, and you weren't going with Borrower Smart, your rate's going to be a lot higher than it would be with this program. This program, it's as if you have an 800 credit score.
Okay.
So it doesn't affect that at all. And what's the other nice thing about it is it's a grant that Freddie Mac and Guaranteed Rate are giving. See, I said Guaranteed Rate again. The Freddie and Rate, a program we put together for first, you gotta be a first-time home buyer. And what happens is credit, after the credit's run, after everything's been pulled, we check the property location they're looking in. And most of these grant programs, they have a limit on your salary, how much money you can make before they give you any assistance, right?
Sure.
Most are at 100, like, you know, IDA loans, Illinois Department of Housing. Those loans are at, you know, you can't be making over 100% of your average median income. With this program,
Got it.
you can make 140%. So if you're looking to
Okay.
buy, you know, in Elmhurst, and the average median income is 100 grand, I'm making those numbers up, so don't quote me on them.
Right.
If you're making 100,000, you can't qualify for this program.
Okay.
If you make now, for an idle loan. But with this program, you can make up to 140, so $40,000 more. So mostly everyone, a lot of people, most all first-time home buyers qualify for it, and they get an additional 3,000, and you get a break in your interest rate too.
Cool.
Yeah.
All right, so going back to the loan process to cap that off real
Oh
quick.
yeah, sorry.
No,
This is
no,
all
this is
good.
again,
Yeah.
I love doing these because I
Yeah.
learn a ton
Yeah,
too.
yeah.
All right, so the loan process, I'm all the way through, and then we always wait
Oh, yeah.
for that clear to close, right? That's,
So-
what does that mean?
Yeah, so clear to close, so basically after we have the full file, after everything, and I'm speaking for all banks now, not just us, so you can understand, so everyone understands how it works. So after the loan's been reviewed by the underwriter, so after the loan officer packs it and then gives it to the underwriter, underwriter reviews everything, they check everything, appraisal should have been ordered right after the attorney review, they review the appraisal. After that's all been signed off on, there may be a couple conditions outstanding. Most of the time, it's insurance. Like they haven't buttoned up their homeowner's insurance yet. They haven't bound that policy yet because you need to have that paid in full prior to. You can do it at closing, but you got to have at least someone there. So that's a conditional approval. Then we will email and call the borrower, let them know what we need in addition. They'll send us over that policy showing it's bound, or they'll call it and get it set up. Then we resubmit that back to the underwriter, and then they issue what's called a clear to close. And then everyone sits back and relaxes.
Right, so when I have my clear to close,
You're
for
done.
all intents and
Cash in
purposes,
hand.
unless I like lose my job or decide
Right.
I'm not gonna be submitting any more
No,
paperwork, I'm good
no,
to go.
you shouldn't.
Yeah.
Yeah, no, yeah,
For the- okay.
no, not at all. I mean, after clear to close, you're done. When the bank sends out that clear to close, you should 100% be done.
Cool, all right.
So if we could just say, so before the clear to close, what would you say are some of the important things to know, like for some home buyer, like they don't know, like, I mean, I've heard like these like horror stories, you know, someone decided they were gonna go and furniture shop,
Oh my God.
right?
I still buy a
Prior
house.
to their closing, because they got this beautiful home,
Yeah.
they're like envisioning what it's gonna
Right.
look like. So what would be some things that you'd like, please?
So we
please
send
don't
that
do
out.
this?
We send that out, and I tell them on the
Oh, do you?
pre-approval. You have to,
I
because
do
I got,
too.
you learn from when you
Yeah,
get
yeah,
burned.
no,
And
I
years
do
and
too.
years ago.
It
Yeah,
sounds
totally.
crazy, you think that people
Oh
would
yeah.
have
No, I had a,
the ability to know
no, yeah.
that, but
Yeah. No, I had a guy that was buying, he was buying his primary residence, and an investment property came up that he paid cash for. He was already tight on his primary residence.
yeah,
For his debt to income ratio. And he's like, well, what does it matter? I pay cash. I'm like, yeah, but you still have insurance and taxes that you gotta pay. Now you don't qualify. He had to have his parents co-sign.
oh my
Yeah,
gosh.
so I mean, those things, you don't wanna buy, you don't wanna, especially furniture, cause
Yeah.
what happens now is everything's monitored. So once you're in the system, anytime your credit's being pulled, we get alerted.
Oh, right.
So
if you're buying
if you're,
things
if you're buying furniture, but I'm very, in a nice way, just don't buy anything, live life as you normally would.
Yeah.
Don't buy anything for a house that you don't yet own. I mean,
Yeah.
we're gonna get
Wait till
there,
you
but let's
close.
just wait.
Well,
Before
I
you
mean,
go
don't buy
take
it-
out
don't
the
buy
Best Buy
anything,
credit
really.
card
Yeah.
and get two new TVs
Oh, yeah.
and,
I think I'd buy a BMW.
$5,000
Yeah,
worth of stuff.
Yeah, yeah,
and
exactly.
Then it's like, now you don't qualify.
Right.
You know.
So those are but that really, that's so rare to happen. It just happens when people don't listen and they think they're gonna get away with it, but that's so rare right now, just because everything's alerted now. Something
Yeah.
happened, and I let them know that too, just nothing, no, but if you need, something's in dire need, let me know, and I'll have to get an updated note for maybe your car died, which was happening before.
Yeah.
Cars died in the process of buying a new car.
Oh.
They'll just have to get me the new note for the car, and I'll add that to the file, and then that's
See,
it. So it's
that's
not,
important
Right.
to know.
yeah.
Right, it's not always a super dire. like,
Right.
if you do this, you're in trouble or screwed. There's
Well,
ways
that's why it's important to know all the information
Totally.
and ask the questions, because sounds like there's a solution.
Most of the time, there always is.
Yeah.
Like a huge one comes up all the time, and people freak out about this is because the timing and it is working right because it doesn't matter. People switching jobs in the middle of the
Mm-hmm. Oh,
transaction.
yeah, that's
okay,
a
so
huge one.
but it's not a big deal.
It's
so
not?
no, because if you're now it is if you went from W-2 to self-employed.
Oh, yeah.
That's a really big deal. But if you're gonna be bettering yourself as a W-2 employee
Yeah.
and switching jobs for more money, how's a bank gonna follow you for that? So we just gotta get an updated verification of employment. We don't even need to have a pay stub.
Oh, okay.
Oh, you
that.
don't? Okay.
No.
So it's not like
I've
I
had
need to
people
see,
switch
like-
in the middle. No, as long because we're doing a verification of employment with someone at their office. We're doing that right away. We got to get a copy of the contract, and we're calling it the day of to make sure they still have the same start date. As long as we get their first pay stub prior to, and we don't even have to see it, but as long as we know the first pay stub's coming prior to their first mortgage payment, and keep in mind, you skip a full month's mortgage payment.
Right.
So it works most of the time. It does. Then it's a non-issue. It doesn't matter.
Yeah.
And that's an agency guideline. That's not, some jumbos don't follow that, but most all do.
Okay.
All right, but
All right.
that's our big one that comes
Yeah.
up.
Yeah,
That
so
is-
ultimately, I think what we should take away from this is that any concern that a buyer might have,
Yeah,
just talk.
Just call- just-
ask the
Yeah,
question.
it's worth the phone call. You
we're,
have to
we're
make the
looking
phone
into
call.
so
You don't
much
know
of
anything,
information
yeah.
now. Just don't hold back. We'll
Yeah.
break it all down for
But
you.
you know how people
Yeah.
is, they just have a lot of assumptions, right?
Totally.
They hear about it from that friend
Oh,
or
yeah.
that family
Yes,
member.
yes.
They read about it somewhere and they're certain that you know, so they don't even bother to find out. I think
Right.
that's a big disservice to
Totally.
themselves, right?
Totally. And education up front is, I mean, I know you guys do it very well. Education up front is key. It really is. Because then there's no unknowns
Yeah.
what's going on. And then that's where you get the very satisfied client, as they all should be.
Yeah,
You know?
yeah. It's about setting expectations.
Yeah.
It really
right?
is. It really
Yeah.
is.
Yeah.
And like when someone's a self-employed borrower and they have 12 K1s, I'm gonna let them know. I'm pretty much asking for everything but your newborn. I mean, it's a lot. There's a lot going on. But but you have to be
Yeah.
upfront with them, just so they don't when that stuff's coming in, they don't. No one gets aggravated because we're letting them know exactly up front what we're gonna need.
Right, what the process is
Yeah.
going to look like, so
Yeah.
they're not like, why you need all this? You
Right.
should, well, I told you up front, you
Yep.
knew everything's good.
Exactly. And there are programs with those self-employed borrowers too that we also have now that they're called non-qualified mortgage programs where we can still do bank statement loans too. So we need to take a look at all their K1s. So there's still definitely good options out there now for all
Okay,
mortgages.
cool.
Yeah.
All right, so lastly, we have to ask, because everybody wants to know.
Yeah.
Interest rates, that's the key, right? That's all everybody wants
Yeah.
to talk about, especially because they were at 3%, 4%, now they're at where they're at, and then we thought they were gonna go down, and they
Right.
did, and now they're back.
Yep.
Like, going back up a little bit in the last couple weeks. I
Last
guess, so-
2.5 weeks have gone up a lot. And it's just we're keep in mind we're still historically low interest rates, but everyone got so used to we're at 2.75 for a year and a
Yeah.
half about.
Yeah.
So
Right, where a lot of buyers entered the market for
Yeah.
the first time, so now
Yes.
it's like they don't understand that, just like they don't understand like not having a cell phone.
Right,
Like I hear
right.
people say like, to that kid who's
Yeah.
30.
Right.
And when they were 25, interest rates were 3.
Right.
And now they're looking and they're 7.
Right.
That's all they remember.
Yeah.
They just remember that, and they attach like, oh my gosh, it's so much more when.
It's really at the end of the day, it's you want to make that's where you talk about payment with them because I've been
Yes.
doing this for a long
Yeah.
time and rates go up and down all the time and they have historically forever. So they're gonna come back down. But the reason why they went up, to answer your question,
like what
so
caused
the market knew and was trading. The bond traders were trading that they knew the Fed was going to cut. Okay, so that's already been worked into the market for about a year. So that's why you saw the rates coming from the they were almost in the eights,
Yeah.
and they came down. And right after the Fed cut, they came down a little bit more, and that we actually got in the fives again, high fives again. And then just what happens is different things happen with the world. So with what's inflationary fears is the number one thing that spooks the bond market. When you think there's inflation in the market, that's when you see rates going up. And with everything that's going on overseas, crude oil was getting higher. Consumer spending is really high, and consumer debt is really high.
It's really high.
Really high. And so what that does is that freaks out the bond market, and people take their money out of the bond market when that happens. And when you see the bonds are tied to the interest rate, so when you see the bond market getting beat up really bad for a long period of time, which we've had for pretty much 2.5 straight weeks, that's when you see rates going up. Now, and then the election, people always get goofy around the election time too. And historically, after elections, that's when you'll see rates coming down a little bit, inventory popping up a little bit. I think people are just waiting to see what happens.
Okay, so we'll leave you with this then. What's your prediction?
Oh, God.
Going into 2025.
Yeah.
We
I'm
won't
gonna put
hold
you on
you.
the
Yeah.
spot here.
Yeah.
Yes, we're not holding you
Yeah.
to this.
I think.
What do you think?
Because you pay for all the stuff that we hear from different traders. I'm really good friends with our guy that runs our whole entire secondary market. I'm on a lot of different executive calls, and I'm on a lot of different calls with real estate brokers. So you get information from all these different places. No one knows exactly. No one has a
Right,
crystal ball
yeah,
to see what's gonna happen.
exactly.
But pretty much everyone is saying Q1 and Q2. We should see their rates coming back down. Now, I don't think they're ever, and it would be bad if they did, but I don't think they'll ever come down back to where they
Right,
were.
the people that are waiting for
What
like,
I mean,
wait until they go to 4.
no,
it's
but
not
but
happening.
at fives, yeah, I think we'll
Yeah.
be in a fives.
Okay.
I think we'll be in a fives, and I think that when they came down in the high fives right after the Fed cut, before they went back up, inventory started popping. If I know you guys don't see it, and people started calling a lot more for pre-approvals. So, yeah.
Oh yeah, definitely.
Because they're sitting at a 2.75 and they don't want to lose that, but then it's a lot easier and more palatable to be at 2.75 to 5.5. So I think that's what a lot
Sure,
of people are
then,
kind of
then
looking at.
8. And again,
Yeah.
that's like you said, it's super important that people have that discussion of payment,
Payment's
not
everything.
just the rate. They
Payment's
hear
everything.
3 or 6.
Yeah.
They just assume nobody really breaks it down to say like, hey, here's your
It's
payment.
all about your payment, your debt to income ratio, how comfortable you are with that payment, how much you love your home, how much you love the home that you're looking to buy. That's really all that matters because rates are going to go down.
Yeah.
They always do.
Yeah.
And any financial advisor you talk to will tell you the same thing.
Yeah, so that home is not working for you anymore, right?
Yeah.
Like, just way too big.
Yeah.
So you're paying so much to maintain it.
Right.
Every month, the taxes, whatever, blah, blah, blah. Like, you should look and see what, if you're buying something a lot less expensive,
Yeah.
right? And then what that payment is, then, yeah, even though the interest rate is
Higher.
5.5, whatever,
Yeah.
versus the 2.9 you got, like, it still might be,
No, totally, and
Yeah.
that's all. And that's you know, after you have the conversations with the clients, because the first thing when they call, it's all about rate. It's always about rate. And they really have to understand the whole process of how this works.
Yeah.
You know, you want to make sure, and after you talk to them in an educated way, and we
Yeah.
educate them properly, like we
Yeah.
do, they definitely get a lot more comfortable and they move forward.
Yeah.
Yeah.
That's,
Awesome.
yeah, that's, because I feel like that's been a really big hesitation.
Oh, totally.
for
Oh,
lots of people,
absolutely.
Which is resulting in the lack of inventory.
1,000% that is. Yeah.
Cool. All right, so we're gonna let you go.
Awesome.
This
We're
was
gonna let our.
great.
Oh, you guys are
I
awesome.
learned so much
So-
today.
No, this was
Yeah,
great.
and the other thing, like I said, is just tying into that, what we want to try to do is expand on this a little more, you know,
Yeah, we went
weekly or
over a
something.
lot of different
Yeah,
things real fast.
But
Yeah.
drill
I could-
down a
we
little
could drill
deeper
down
on
in-
different,
for sure.
different types of loans, conventional, like you were saying,
Yeah.
VA, FHA,
Jumbo.
the jumbos, someone that is, there's a lot of people out there that are, you know, that don't have W-2s, that are,
Right.
you know, that want to buy a house,
Yeah.
and it's like you said, the bank statement loans,
We've
how
got,
those work, you
we've
know,
got, and they're great, and because they're not like they were back in the day when everything was crazy, 2007, 2008, or 2000. That's when things were crazy with no one looking at your material.
Yeah.
Now we gotta have at least a good amount of money down, 20% down for those loans that people don't have W-2s or income. If we're doing bank statement loans, they're still good loans because you gotta put down a lot of money. So those are good. That's a good discussion I had at one point.
yeah, for sure. All right,
All right.
cool. So
Awesome.
other than that, do you want to give out your information really quick? So
Oh,
if
sure.
you're out there and you need to get pre-approved, you definitely should get in touch with John.
Yeah,
So,
I'm available, like any good loan officer should be 7 days a week, whenever, because that's when people are looking at homes, sometimes
Well,
nighttime.
it's
Yeah.
always after Friday,
Yeah.
after 5 o'clock.
Always.
Right? The-
Oh, that's when they're going looking and
But
decide they
you
haven't
chose the
got
wrong
it yet.
profession if you're not gonna answer the phone. So
Yeah.
I'm always available, even if you have questions, and I don't even have an office line, I just give my cell for everything, and that cell phone number 630-290-6251, once again, 630-290-6251, and my email address is jnoldan@rate.com. You guys, thanks so much for having me.
Yeah,
I
cool.
really, really
Thank
appreciate it. You guys are
Andrea,
awesome.
real
Thank you.
quick,
Thank
you can
you,
reach
John.
Andrea at,
Hashtag living UP Westline.
and you can reach me, hashtag 280blue. You can find me everywhere, Instagram,
Everywhere.
Facebook, all that stuff. So again, we'll see you guys all later. John, thanks a lot
Have a
for
great
coming.
No, of
weekend,
course,
everyone.
thank you
Cool.
guys. Thanks.
Awesome.
Thanks, perfect.